So Paige, 2017 was really quite a record year. Interest rates remained at all-time lows. The stock market truly hit all-time highs, although there's been some new volatility that's entered into the market here in 2018. And against that backdrop, there was $450 billion of new money that in 2017 entered the private equity markets, an astounding number. And the barometer notes an interesting reversal of where that money is being directed. It had been more recently directed to fewer fund managers, but the most recent barometer highlights the fact that's actually being directed now to more managers as we seem to go forward.
Well, it appears that investors still really like private equity as an asset class, and they have a lot of capital that they need to deploy. What we're seeing is increased competition, though, for the best managers. In many cases, investors are actually being scaled back in the size of the commitments that they want to make to those managers. And as a result, instead of reallocating that capital to another asset class, they're committing to second-tier managers. And the barometer also shows us that investors are almost unanimous in their view that too many weak fund managers are being funded as a result.
And again, back to the barometer, this one highlights the fact that 40% of investors actually plan to expand the roster of investment groups to which they plan to deploy their money. And 50% of investors expect to write larger average commitment checks to the investor groups that they plan to support, which raises an interesting question of where will this money actually specifically be deployed.
We're seeing a change today in that they do tend to favor the single product specialist firms instead.
The larger platforms, the multi-strategy platforms, offer the advantage of a diversified set of investments with the ability to write large average checks and often at reduced fees.
And the specialist managers, though, given that they have a niche focus, they should be able to generate higher returns, maybe with the addition of some volatility.
Right, and it really is all about returns. If you go back to a barometer in 2006, it highlighted that about half of all investors expected to realize net returns in excess of 16%. The most recent barometer highlights that less than a fifth of investors expect to realize net returns in excess of 16%.
It's quite a drop over the last 10 years in expectations, but I think that the outlook for private equity is still quite healthy, with 4 out of 5 investors still expecting net returns of north of 11%.
Still very attractive numbers, which of course explains why almost $500 billion came into the private equity markets in 2017.